Hey everyone, Sam here. Let's get started with today's session on supply and demand zones that work. It's a great little thought of the day here always good to ask yourself this question, right? If you could live your life over, what's the one thing you would do different? Another way to ask that question is, if you could have a conversation with the 15-year-old version of you, what would you tell the 15-year-old version of you? If you can only say one thing, give the 15-year-old version of you one piece of advice, what would it be? Anyway, something to think about. So let's get on it. Supply demand zones at work. Again, my name is Sam Seiden. I developed the original supply demand strategy. It's a strategy we use today. And people teach and search and try to dive into the strategy, but again, because it's been so many people have added so many different things to it, it's gotten overly complicated for some people. So these sessions are to help eliminate confusion and build confidence. Remember, the Pinnacle Institute is not an investment advisor. I am a licensed fund manager. There is not a guarantee of success when it comes to trading your hard-earned money in the market. In fact, there is available research does suggest that active traders lose money. I've done YouTube sessions on this before, and it's important. Take your time and make sure you understand what you're doing and you're understand and are okay with the risk and all that. Don't rush into this. Markets are moving for sure. And all right, so let's take a look. So if you were in yesterday's session or watched the video of yesterday's session, the YouTube session, we talked about inverse markets for a few minutes. So I want to give you another example of an inverse market that, again, met entry for us today. So in our live session this morning or yesterday, we were covering a qualified demand zone. And then today, yesterday and today, this is the dollar. So this is the US dollar. So price came down into the demand zone where we expect it to rally. And the profit zone was pretty significant for what it was offering. So with the stock market, with the dollar into a qualified demand zone, right? There's a lot of, and let me pause here for a second, because again, a lot of people look at this and say, oh, rally-based rally, that must be a great demand zone. Well, rally-based rally has little to do with it. There's rally-based rallies all over the place. There's rally-based rally, doesn't work. Rally-based rally, a little one there, doesn't work. Rally-based rally doesn't work, right? Rally-based rally doesn't work. This is not just rally-based rally and drop-based drop, right? The majority of those, when price comes back, price is going to go through them. So this is all about proper structure and location analysis. But let me get back to the topic. So we had the US dollar today into our qualified demand zone where we expected it to turn higher, and it did. When the dollar was into demand, we also had a number of stock markets, for example, that were into supply. Here's the NASDAQ, right? So this was the NASDAQ a couple days ago, and over the last day and a half, prices rallied up into that supply zone, and notice the pretty significant profit zone below. This is today's trading right here, falling from the supply zone. So dollar into demand, stock market into supply. That was the NASDAQ. Also today, we had the Dow rally up to double supply zones, right? Two supply zones on top of each other is pretty significant. If I think back to my days on the trading floor, if I had two big stacks of sell orders, right, one price after another, well, that's what that is on the price chart. That's the strategy, okay? So we had price rally up to and into the first supply zone and went pretty deep. Then with the dollar into demand, that little bit of inverse help there and double supply zones. Just like the NASDAQ, the Dow is now falling from supply, as it should. With the major indexes falling from supply zones, we also have stocks like Apple that recently traded up into supply. And again, while this is a drop-based drop supply zone, it all comes down to following rules, 100% rule-based structure and location analysis, okay? So don't just think a drop-based drop is a supply zone that's going to work. A lot of those are going to fail, okay? In fact, look at this rally-based rally. Price goes through it like it's not even there. But this one worked really well. What's the difference? Proper structure and location analysis. And that's to give ourselves the best chance in the trade. And then we just manage the risk and reward, follow our rules, and there you go. So you can see this supply zone in Apple, right? Again, the one thing I'll say about this one is if you include pre and post market trading, there is trading that takes price out of the supply zone right there. But if you don't include that, there's a pretty big gap here. But either way, the fact that price moved away from this area so strong, right, and then structure and location of the level itself, that was a high probability supply zone. All right. Unrelated to any of those, we also had the oil come right down into a qualified demand zone. But I wanted to point out here is really similar to Apple in that notice the rally away from this demand zone was a gap. A gap represents the most significant supply demand imbalance. Okay, so price then coming back down to our qualified demand zone where there was a big imbalance. Competition to buy causes price to turn and pushes it higher. So for today's session, wanted to focus on that inverse market relationship a little bit more. Hopefully that was helpful. How to identify a proper structure and location supplier demand zone based on the original supply demand strategy rules. And then the other thing you could take away from today's session is the power of those gaps. On that note, hopefully that was helpful. Have a great day.